In 2016, the Indian telecom landscape was forever changed by the arrival of Reliance Jio's unlimited data and voice calls.
And starting 4th of December 2016, every new Jio user will get Jio's data, voice, video, and the full bouquet of Jio applications and content absolutely free.
Sparking a fierce tariff war that changed the industry almost overnight. Since then, India's telecom sector has been through a dramatic phase of consolidation. With rising competition and ballooning debt, the smaller players have been absorbed or pushed out, leaving behind a big three ecosystem: Jio, Bharti Airtel, and Vodafone Idea. Of course, there is the state-run BSNL, but that is a distant fourth. While most operators struggle to survive in the face of Jio's disruptive pricing model, one company managed to stand its ground: Bharti Airtel. What did Bharti Airtel get right? How has it weathered the storm? And does it have what it takes to not just compete with Jio, but to lead the market? Welcome to Bottomline by Groww. I'm Radhika Bajaj. In today's episode, we will dive into Airtel's ecosystem, its financials, and what lies ahead in this fiercely competitive industry. Bharti Airtel Limited is, of course, a leading global telecommunications provider with operations not just in India but also Sri Lanka, 14 countries across Africa, and joint ventures in Bangladesh. As of FY25, the company ranks among the world's top mobile operators with a customer base of approximately 591 million. This vast reach highlights Airtel's strong position in the market, offering a seamless ecosystem of unified services all integrated into one digital platform. First, of course, is the mobile services, which is the heart of Airtel's ecosystem, offering prepaid and postpaid voice, roaming, and high-speed internet. This nationwide reach is supported by over 1 million retail outlets, and its digital platform serves more than 361 million mobile subscribers. Second is broadband, where Airtel delivers fixed-line telephony alongside high-speed broadband across 1,476 cities. Now, this expansive infrastructure supports a wide range of services, from seamless streaming to smart home connectivity, all within Airtel's integrated ecosystem. Third is DTH. Its direct-to-home service delivers a rich TV offering with nearly 16 million subscribers tuning in to over 700 channels. Airtel DTH keeps customers engaged with live and catch-up content. Lastly is Airtel's Payments Bank, which leverages the mobile and retail footprint to offer secure savings, remittances, and payments on the go. Today, about 95 million users transact monthly through the bank's digital rails, enabling seamless in-app payments and transfers across India. This integrated ecosystem drives its product-service ecosystem strategy, where all offerings are unified into a single, digitally enabled omni-channel network. Now, this seamless integration makes Airtel's services a natural part of customers' daily lives, making it hard to switch to other brands and fostering loyalty and continuous upgrades. Moreover, Airtel's ecosystem extends well beyond India. Its African mobile services arm delivered robust growth, up 23% year-on-year, accounting for approximately 23% of consolidated revenue in FY25. In fact, the African business is growing at twice the pace of India, highlighting its rapid expansion and potential. While Airtel's top line rose by 15.3% in FY25, net profit exploded with a 334% year-on-year jump. While stronger core operating performance and full-year consolidation of Indus Towers lifted EBITDA 19% year-on-year, and margins expanding, the bulk comes from exceptional items. Notably, a 7,286.8 crore rupee reversal of earlier provisions and a 3,194.9 crore rupee deferred tax credit. In line with its strong performance, Airtel's shares have rallied 265% over the past 5 years and is now trading at about 2,014 rupees as of 26 June 2025. However, with such impressive growth, how does Airtel's current valuation stack up? Trading at 13.2 times EV to EBITDA, well above its 10-year median of 9.5 times, Airtel's current valuation looks slightly stretched. On a PE basis, Airtel is trading at 40.9 times its earnings. While this valuation multiple may not seem excessive on its own, it nonetheless makes Airtel one of the most expensive large-cap telecoms globally. A peer group comparison of market capitalizations and PE ratios across the world's telecom giants confirms that no other major operator commands such lofty valuation metrics. However, can this premium valuation actually be justified? Now, a telecom business can grow in two ways. First is through growth from user additions, and second is by expanding revenue growth per user. To begin with, growth from user additions appears largely done. Over the past 5 years, Airtel's mobile subscriber base grew from 327.8 million in March 2020 to 389.8 million in March 2025, a CAGR of just 3.5%, signaling that new user additions have largely plateaued. The only viable lever left for revenue growth per user, that's where ARPU, or average revenue per user, comes in. It tells us how much money Airtel makes from each customer, making it a critical gauge of profitability, customer loyalty, and overall market strength. A higher ARPU indicates effective monetization of users, while declining ARPU can indicate customer churns or pricing issues. Let's take the mobile segment, which is the core business and central revenue driver for Airtel, which has an ARPU of 245 rupees as of FY25. And this has increased 17.3% year on year. Now, Airtel's ARPU has consistently led the industry, rising to 245 rupees by the end of FY25, well ahead of Jio's 206.2 rupees. But will the ARPU expansion continue? And to what extent? One common defense of the growth narrative is that India's ARPU is still far lower than in developed markets since it is only $1.8. That's true in absolute terms, but it misses the broader context. ARPU must be seen relative to per capita income. On that front, India's ARPU adjusted for income is not drastically different from developed countries. When benchmarked to affordability, the room to grow ARPU thesis doesn't hold as much weight. Moreover, Airtel reported a flat ARPU of 245 rupees for Q4 FY25, unchanged from the previous quarter. This stagnation signals a setback in the company's push to attract more premium users, a key part of its strategy to improve profitability. Now, despite adding 0.6 million post-paid users and 6.6 million smartphone data consumers, the ARPU did not reflect any upward momentum. This suggests that the impact of the July 2024 tariff hike may actually have fully played out. The big question now is whether Airtel will join its rivals in another round of tariff hikes to lift revenues. Operators have long pushed for higher prices to boost their margins, but Airtel won't go it alone. A unilateral price hike will risk a customer exodus to cheaper plans. As of today, there are no set timetables. The industry will watch ARPU trends, market reactions, and each other's financials before pulling the trigger. However, Airtel is not standing still. To lift ARPU, it's rolling out several new initiatives. First is the tariff architecture overhaul. Airtel's tariff revamp swaps out one-size-fits-all packs for usage-based bundles. Light users get lean, no-frills plans that eliminate wasted freebies, so you only pay for what you actually need. Heavy data users can choose premium tiered plans loaded with extra benefits at higher price points. This targeted approach makes it easy to upgrade to the right plan and ensures any future price bumps boost revenue directly, rather than being offset by blanket giveaways. Secondly, management is stripping out high device subsidies and other embedded acquisition costs. In the past, when Airtel raised its monthly prices, much of the extra revenue simply got recycled back into financing handset subsidies or promotional freebies. So margins didn't really improve. By removing these embedded costs, future tariff hikes will flow directly to the bottom line as pure incremental profit, instead of being swallowed by higher subsidy or marketing expenses. Finally, by accelerating conversions from feature phones to smartphones and from prepaid to postpaid, and by monetizing the surge in data usage and international roaming, Airtel is putting every lever in place to lift ARPU sustainably. However, Airtel also faces certain risks that could impact its performance. Firstly, despite fierce competition from Jio, Airtel now faces a fresh threat from Starlink. With no need for copper, fiber, or towers, Starlink offers broadband everywhere, especially in rural and hard-to-reach areas. That makes it a direct rival to Airtel's fixed line and wireless networks and could undercut its rural 4G coverage, limiting subscriber growth where traditional rollouts aren't viable. Next, while Airtel's Africa segment, which contributes about a quarter of its profits, continues to perform well, it remains vulnerable to currency volatility and has actually negatively impacted FY25's consolidated revenues as well. Lastly, Airtel's significant debt load poses a risk to its financial stability. As of FY25, the company's net debt stood at approximately 1,48,312 crore rupees. However, the company has stepped up its deleveraging plan, which can be seen in the improving interest coverage ratio, which as of FY25 stands at 2.7 times. Concurrently, the EBITDA to debt ratio has increased from 0.29 in FY20 to 0.66 in FY25, reflecting a notable improvement in the company's capacity to service its debt with its operational earnings. While Airtel's debt levels have grown over the years, the rising EBITDA to debt ratio signals that it is progressively able to handle its debt burden more efficiently. Despite deleveraging, ongoing debt servicing and reliance on external financing could pressure future cash flows, particularly during currency fluctuations in Africa or market downturns. While Airtel is a stable cash flow generator with reserves standing at 1,10,772 crore rupees and a dominant player in the Indian telecom market, the issue lies in the valuation. Airtel's market cap has surpassed 12 lakh crore rupees, placing it among global telecom giants with much larger revenue and profit pools. The key question is whether this valuation can actually be justified by ARPU expansion. What do you think? Let us know in the comments.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.